Yo, yo, what is good? Hi, TF Mob. We are back with another video for the week, and I'm about to break down the pairs for our market analysis. But real quick, before we get into that, I did want to show you guys this gaming channel. Hold on, so you guys can subscribe to it. This is where I'll be posting live streams, past broadcasts, since I actually have access to these now after I stream. Hold on. And this is it right here. So there's old videos on it right now. Once I get around to pulling those Twitch streams, because I do have past broadcasts if you go out on this link right here. But once you go there, you'll scroll down to the bottom and you'll see all the past broadcasts I've had for Vanguard rank play. If you guys tune in Wednesday nights 6 to 8, that's usually when we'll be streaming. And I don't stream really long. I try to keep it short so that way people aren't sitting there and getting dragged. So now we'll go here, pull up our trading view. And let's see. And let's start off with the DXY right here. So going off last week, it looks like now the market's trying to reverse to the upside for the US dollar. We got a bullish engulfing on our weekly. So now I'm looking at the US dollar going up in strength. If we look at the Australian dollar, I see that tanking right now. It looks like it retested its previous high. So we'll be looking to take that down to the TP1 zone. And if it breaks this week and continues lower, we'll see it go to TP2. But if it does respect this low and continues to trend upwards, we're going to look at the opposite outlook. Usually when I go on these index pairs, I showed y'all on Friday that I like to use the Heikin Ashi candles. This helps me see key market pivots and does add a little color there. So that way you can actually know when market's slowing down and waiting to reverse the trend or going to leave a consolidation. So we can see like right here, price is starting to turn the candles to the upside. We got the previous leg or the previous high up here. And then same with the DXY, it looks like it's trying to go back up to test the highs. Although it's really overbought, it could always come back down. But we'll keep an eye on that. But this week, what I did want to do is I wanted to simplify how I'm actually looking at these lower frames, because I know last week there was just a lot of clutter. It wasn't really clear by the end of the week, and there was moves missed because I was focused on too many small decisions. So here, if I go ahead and drop to the low frame, we're gonna start on our 4-hour and just shift our previous weekly high and our previous weekly low. All right, get this all out of here. All right, so real simple. We'll go through and just clean out these pairs. These are looking like they're setting up some really nice structures. So I'm actually looking for those to just play out. Oh, actually, hold on a second. I just remember one thing. One thing I want to do is I do want to keep my swing high and swing lows. Actually, take that off then. All right. And let's go back one more. Okay, so it's still there. All right. So you can see right here, this is the previous demand zone that we left. Price is headed back towards it. We can see it test this weekly low and then continue up. If not, shoot, at that point, we're looking for the opposite bias. So I do see GU going down to finish because there's a lot of money they have left that they need to grab. But you know, you can never be too certain. All right, you get a clean slate. So at least that way we can just see the zones. We'll just look at the overview. Yeah. Go back up real quick. Boom. All right. And the reason why I'm peeling back these layers is because when you get really specific, it's easier to get faked out when you're focused on the wrong frame at the wrong time, rather than sticking to one of the intraday frames that kind of helps guide you along. So when I was back testing, I did notice the 4 hour likes to, before it pivots, it'll generally throw two moves in the same direction. And once it gets rejected that second time, it's more certain for the pivot. So if I'm looking at this, price trail down last week after that buy, and they threw a nice fake out, came down and tested a previous low, but didn't break it. And then if you see the 4 hour, they created one bullish engulfing pattern, came down and created a second one. So on that second one, you would have been able to get right in and take it back to the upside to this wick just for the retest of the high. And if they break this level this week, we can see it continue up higher. So we'll go ahead and get that off. Move the indicator. So now we can see a more of a clear overview, and we can just look at the zones to zone. Hold on, let me go ahead and wipe this clean off. All right, bet. So now we're gonna go up to our weekly. We're gonna start off with the candle. We already know we have a bearish engulfing. So I'm gonna use my rectangle, drop down right here. And if you pay attention to this weekly low right here, this is the peak low. So I'm gonna place a little rectangle right here. You'll just put the bottom side of the rectangle where the peak low is and then squeeze as much as possible so that at least you have a fine-tuned zone of where price needs to be on or close over. And whenever it closes over or under this, that's generally the direction you're gonna go. So I'm gonna do the same thing on the top side. Now we have the trap for the week. Okay. You can kind of see the detail right there. Boom. Okay, so right here at this high, this peak, across the top, and now we'll go down to our daily. We already have our TP zones marked, so it looks like it's coming to break its structure right now. We have the bearish engulfing confirmation right here. So we can go down to the 4 hour, and now we can mark our swing highs and swing lows. That way we know the direction of the trend. So if I'm looking at this right now, my current swing high is right here because this high led to this previous low down here breaking, and this is where the previous swing low was. And actually, let's make sure real quick. Yeah, I'm looking at this and it's really close to breaking, but I don't think that's confirmed. They did not close all the way. So it's rejecting now, but this is still the previous swing high. So we're going to keep that there. We're going to mark the alert. So that way when it breaks, we'll know if it's going to turn around. And then we'll put the crossing. So AUD USD crossing on the 1 hour and the swing high. So I just put SH. Leave that there. And we'll do the same for the bottom. So for now, I'm going to keep it back here since we didn't get the confirmed break. But now we know, at least if it comes back down a second time, that's the time to execute. So now we'll mark the liquidity zone that we're in, which will be right here. So this could, later on, this could be a supply or demand zone depending on how it breaks out. Well, and then that's all we're going to do there, right? So just going to keep it real simple. I'm going to peel back the layers and just look at the overview. So if I'm looking at market structure here, this is a clear setup for Asia session here. Right. And that's the thing. If I were to go on the low frames, it'll confuse a lot of new people only because all those lines have so much meaning that I only I understand really well just because of the repetition of using it. So by peeling it back, it not only like doesn't trip me up on in terms of reacting where I don't need to react, but it helps me just stay on point with the bigger candles. Um, a big thing I was having trouble with was closing out for the past couple of weeks as far as the ending of the week. So the start of the week would always go good and it will throw a fake out, but then it's the ending of the week that we want to make sure we catch because that's the meat of the move pretty much. You don't really want to get into fake outs because you'll only get so many pips before it goes the other way. So if we're looking at AU and GU, we knew US dollar is going to go up for a little bit. We know the Great Britain pound and the Australian dollar are going down in value right now. So because of that, we'll basically have a bias for sales, but in the moment we'll react on confirmation around 8 o'clock. So if you're keeping your eye on that 4 hour, depending on how this is closing or how that opens at 8 and how the next 2 hours react, that will help us determine our buy or sell. So we'll do the same thing for GU because they almost look exactly the same. And we'll go ahead and move our zones. So right here, you got your peak weekly low from last week. Right. And then right up top, you have your peak weekly high. We'll move that. Right. So now we know if price respects either of these, which way it's going to go. So we'll drop down to the daily. We know where price needs to go to break the structure. And we'll go down to the 4 hour to see the anchor points for our swing high and swing low. So it'll be like right here and right here. We'll go down to the hourly and we'll mark the liquidity zone. Real simple, pretty straightforward. So we got swing high right here, swing low right here. We already see the break right back over here. So this became the flip zone. I'm just going to draw a line right through it so that way we know as soon as price closes back over or under where it's going to go. So boom. That's our flip zone. And then right here's our swing low. So I'm going to set alerts in case it breaks either or. Swing high. Right. So now at that point, it's a waiting game because you're waiting for time to create the prints which break certain structures. And then of course, always react on the retest, but not the breakout. So go here. Once for bar close, swing low. Okay. And keep in mind, guys, you can always feel free to use trend lines that, I'm not opposed to those. I just like to keep things pretty straightforward and less confusing. For some people, they see trend lines more clearly. I see bear flags, bull flags, market structure easier using trend lines. It's like right here. Here's another one. So just doing something as simple as this can kind of help you keep an idea of the downtrend, right? Because it goes back up, but it's just overall, it just keeps going down, right? So then at this point, you can wait for the breakout retest and get in. I think I might start doing this. That's actually pretty cool. But go ahead, go down to AJ. We'll do the same thing. So go on our weekly, look at last week's candle. You see the overall market structure based off how the candle closed last week was bullish. It actually looked like it retested its previous low. And if we go to our daily, if we have a bullish engulfing and a breaking structure, that's a good sign that we're going up to hit our swing high. So let's go down to the 4 hour. It does look like we have a bullish engulfing and it's creating a high low right now. The 4 hour, we know our anchor point for our swing high and swing low is going to be this, and swing high will be right up here. Right. So honestly, I might do it this way and just we'll see if it even matches. That way you guys can kind of see. Boom. Right here. right? And it's actually around the same area where the previous swing low was. Boom. So I'm gonna go ahead and mark that. We'll set the alert. Once for bar close. Cross and swing low. And then we'll do cross and swing high. Boom. And then we'll label that. So that's not a flip zone just yet. But when price breaks and we get the alert, that's a perfect time to switch the line to a flip zone, because then that way I know when price comes down and taps it to get in at that point. So here we can go to 4 hour, same deal. So go down to, so we see the weekly pulled back, had a nice little sell off at the beginning of last week, and then closed out really, really bullish. They pretty much took back everything they gave off and more. So we'll go back to the daily. We see the breaker structure and prices coming up to test that previous high. So it looks like everything is respecting the overview so far. So keep in mind, I don't adjust these high frame lines. I only adjust the low frames, so 4 hour and lower. So every week from the top of the month to the end of the month, that's when you'll see me doing these small changes. But when a new month starts, that's when I readjust everything so you guys can kind of see how things play out for that month. So here we'll go over to our weekly. Do the same thing. Y'all peep the repetition though. Peep the repetition. Hold on. So boom. So now that that's trapped, we know what's going on. So price could start off this week from Sunday to about Monday, closing above this line, this previous weekly high, and could come up and test this previous weekly candle and then drop. But we won't know by Monday. We won't know until probably like late Monday night. So if we go to 4 hour, we'll go ahead and do the same thing. Swing high, swing low. So we know this is a swing low right here. This is our current swing high right here. Okay. And then right here, this is our flip zone, because this is where our previous swing high was. That got broken out of. And now price should retest before continuing. Okay. So boom, swing low. We'll go ahead and set the alerts again. Boom. Boom. All right. So now that's all set. And we'll go down to our 1 hour and we'll just wait. Okay. And now that this broke out, we can actually mark a point of interest being right here. So the last down move for the up candle, which was probably about right here. So this is a point of interest. So if price broke back under the flip zone, we know this is what they're targeting. Right. And then we'll go over here. And on GJ is the same thing. So AJ, UJ, and GJ, you can see they all have about the same structure. Trying to reverse on their daily, continuing to retest that previous high on the daily. So this could be a big structural move, and we just got to give it time to see how it plays out. Go to the daily. Yeah, you can see right here on the weekly, they just tested that previous low, and we can go ahead and trap it. Boom. Switch that to green. Switch this one right here. Yep. I think. Oh yeah, facts. I do have it saved. I said that look a little different. It is. All right. Boom. There you go. Go ahead and squeeze it down. So now we know on the daily where we're headed. So it looks like we're going up, got the breaker structure, swing high. So no, I'm not gonna lie, these setups look real nice. These is real nice. What? Okay, let me go ahead and leave. The previous high that was broken out is right here. So this is our flip zone right here. So the only reason why I look for that flip zone is because I know this is where the market pivoted and did the breaker structure. We had this wick right here where once price came back, it closed above, came down, tested where it closed out of, went a little higher, and then now we're back in that zone. And this was our previous swing high. So from our current swing high and from our flip zone, we know we're still trying to head up based off this print. You go down to the hour. So, it should all be there. And actually, hold on, let's do these alerts right quick. But yeah, that's about it should have like maybe a good 2-3 days of movement. We see some. Baya. Okay. So I'm gonna do the real rise blocks for all of these setups. So that way I'm actually able to know my points of interest. This didn't break this level. I'm not gonna consider it a point of interest yet, but where we are right now could actually lead to the lowest breaking. So I guess we'll wait. Once it happens, then that's a good time to look for that entry for AU. I ain't gonna lie, that look good. They look real good. All right. Real simple, real straightforward. So that's gonna wrap it up, y'all. I hope y'all do enjoy this video. If you guys could please like, share, comment, subscribe. The feedback will be much appreciated to know what should be updated, what should be edited. With that being said, you guys have a great week and get back to me on Friday. This is gonna look real nice though. Peace out, y'all.